All right, everybody, welcome back to Talk Tickers. We are diving deep today, you guessed it, into an earnings call.
Earnings season keeps on churning.
It does. And we are here to break it all down for you.
That's right. Today we're talking all things Diamondback Energy.
Ticker symbol FANG.
Yes, exactly. For those following along.
For those following along, their Q3 2024 earnings call just came out. And well, we always have a lot to say when it comes to these energy companies.
A lot to unpack here.
Yeah. So why don't we just jump right into it? What was like the biggest thing that stuck out to you?
So right off the bat, the thing that jumped out at me was their efficiency. It's incredible what they're doing on the efficiency front.
Okay, let's talk about that. They are talking about reducing their rig count quite a bit. Right. From like 22, 24 rigs down to 18 for the 2025 program.
It is a big drop. And they're planning to keep their output the same.
Yeah, I was going to say, isn't that the crazy part?
Yeah.
They're saying, even with this drop in the rig count, we're still going to produce at the same levels.
Yep. That's some serious efficiency.
It does beg the question, though, how are they doing that? How is that possible?
So it seems like it's a couple things. They're integrating the best practices from their Endeavor acquisition.
Oh, right, the Endeavor deal.
That was a big one.
It was.
And they seem to be taking what they learned from Endeavor and applying it across the board to their operations. And then on top of that, they've gotten some help from some deflationary pressures in the market, which is helping keep their costs down.
Okay.
So they're really firing on all cylinders there.
So that's interesting because they actually threw out some pretty impressive figures. I think they said that they got their Midland basin will cost down to like $600 a foot.
$600 a foot.
Yeah.
That is really impressive.
Now, for our listeners who aren't out there, drilling for oil every day, why is that number so important?
So basically every foot they drill costs money. So the lower they can get that cost per foot, the more profit they make from each well. And $600 a foot is incredibly low, especially in today's environment.
Wow.
So yeah, really impressive stuff there.
Yeah. Okay, so they are definitely running a tight ship over there, it seems. But they also keep throwing out this word. And it's almost like a mantra now, this idea of flexibility.
Yeah.
What's the deal with that? Why are they putting so much emphasis on flexibility?
So flexibility is key for them. They're basically saying, look, we're not going to be tied to a rigid plan for 2025.
Right.
We're going to adapt to the market because the market's still pretty uncertain.
So they're playing it smart, not overcommitting when things are unpredictable.
Yeah, exactly. They're prioritizing free cash flow over growth. They're basically saying, we'd rather generate cash and return it to shareholders or have it available to make strategic investments than just chase production growth at all costs.
Yeah, which makes sense. It's a more sustainable approach in the long run. You're not just, pumping. And then what happens when the music stops?
Yeah.
You got to be able to be nimble.
And they're even considering building more drilled but uncompleted wells than usual.
Oh.
Yeah.
Now, you're going to have to explain that one for the listeners.
Yeah.
What are drilled but uncompleted wells, or DUCs as they're often called? And why is Diamondback building them?
So a DUC is basically a well that's been drilled but not yet completed.
Okay.
So they've drilled down to the oil, but they haven't installed all the equipment needed to start pumping it out.
Okay. And why would they do that?
Yeah.
Seems like you're just leaving money on the table.
So it's actually a strategic move. If there's a downturn and service costs drop, they can go in and complete those wells at a lower cost.
Wow. Okay.
So it's like they're stockpiling potential production for when the market is more favorable.
Okay. So, I mean, this is all very interesting. We're talking about efficiency. We're talking about flexibility. But there's another interesting piece to this puzzle that I kind of want to shift to. And it's this idea that Diamondback's not just an oil and gas company anymore.
Yeah.
They're starting to branch out.
Yeah. They've got their fingers in a lot of pies these days.
They do. They've got this investment in the EPIC crude pipeline. Then they got that whole thing with Deep Blue, which is the water management company.
Right.
And then they're even talking about developing data centers that are powered by their natural gas.
Data centers in West Texas. It's a bold strategy.
It is. And it kind of makes you scratch your head at first. Like, what's the thinking behind that? What's the angle?
So it's actually pretty clever. They have a ton of natural gas, and data centers use a ton of energy.
So they're essentially cutting out the middleman. They're creating a local market for their gas.
Right, and potentially generating higher returns.
Yeah. Okay. So not only are they getting involved in this whole other industry, which could potentially be very lucrative, but they're also finding a way to make use of their existing assets.
Yeah, exactly. And it's got some potentially interesting environmental implications down the line.
So we're talking efficiency, We're talking flexibility.
Yeah.
We're talking diversification. What else is on Diamondback's agenda?
So another big thing that stood out to me was their commitment to shareholder returns. They returned a whopping 78% of their free cash flow to shareholders in Q3.
Whoa, hold on, 78%?
78%, primarily through share buybacks.
Wow. They're putting their money where their mouth is when it comes to shareholder returns.
Yeah, they are. They're aiming for a balance between buybacks, dividends, and debt reduction. But their preference for a counter-cyclical buyback approach really stood out to me.
Okay, break that down for me. What is a counter-cyclical buyback approach?
So it means they're more likely to buy back shares when the market is down and prices are lower, which maximizes the value of those repurchases.
Gotcha. So they're essentially buying low and selling high, but with their own stock.
Exactly. They're being opportunistic. And it seems to be paying off for shareholders.
Okay, so, I mean, it sounds like they're doing everything right. They're crushing it on efficiency. They're staying flexible. They're diversifying their business. And they're showering shareholders with cash. Sounds like a pretty solid strategy.
It does, doesn't it? They're well positioned for success no matter what the market throws their way. And I think that kind of brings us to our favorite segment.
Oh? You know what? Time for this is not financial advice.
Let's cook up a trade idea.
All right, so let's put on our, speculation hats here. And let's say we want to come up with a crazy trade.
A wild but plausible trade idea.
Based on everything we just learned about Diamondback. Okay?
Hit me.
Okay, here's a play. Go long on Diamondback Energy, ticker symbol, FMN.
Okay, I'm listening. They do seem to be firing on all cylinders.
But here's the twist. Short, a basket of other oil producers
Okay.
who seem to be overly focused on growth in what could be a potentially oversupplied market in 2025.
Ooh, that's spicy. You're betting on Diamondback's efficiency and flexibility to outperform in a potentially challenging environment.
Exactly. If the market softens, Diamondback's going to be able to weather the storm, while those growth-obsessed producers might struggle.
Interesting theory.
But remember, folks, this is all purely hypothetical.
This is purely for entertainment purposes only.
And most definitely not financial advice.
Do your own research, consult with a professional, and don't blame us if this wild trade idea goes belly up.
All right, we're going to take a quick break, and we'll be right back to continue our deep dive into Diamondback Energy. Welcome back to Talk Tickers. We are back. We are digging deeper into Diamondback Energy. And it's interesting, because I think we're starting to see a little bit of a theme here.
We are. And I think it makes you wonder, are we seeing a bigger shift in the energy industry?
Yeah.
Is Diamondback's approach kind of a harbinger of what's to come?
That's the question we're trying to answer here. Is this a fluke, or is this the new model?
Right, because a lot of these energy companies have been stuck in this boom or bust cycle for decades.
And investors hate it.
They do. It makes it hard to plan. It makes it hard to value these companies.
Yeah. It's like trying to predict the weather.
Exactly. It's unpredictable.
Yeah.
Nobody likes that. So Diamondback, it seems like they're taking a more measured approach.
Right.
They're focusing on efficiency, generating consistent cash flow, returning value to shareholders.
Like they're playing the long game.
Exactly. And they're also recognizing that the world is changing. The energy landscape is evolving, and they need to adapt.
And that's where that diversification strategy comes in. Remember those data centers we talked about?
Yeah, that's a big piece of it. They're not putting all their eggs in one basket.
They're not.
They're hedging their bets, which is smart, because who knows what the energy landscape will look like 10 or 20 years from now?
Right.
Nobody knows. So by diversifying their portfolio, they're giving themselves more options.
Yeah. And I think that's a big part of being a successful investor too.
Yeah.
Right? It's not just about finding companies that are doing well today. It's about finding companies that are positioned for long-term success.
Exactly.
And that have the ability to adapt to change.
Yeah. Because change is inevitable.
Especially in the energy sector.
Especially in the energy sector.
So all this brings us back to our central question.
Yeah.
Is Diamondback's success a fluke? Or is this a blueprint for how other energy companies can operate?
It's hard to say for sure, but I think they're definitely onto something.
It does seem that way.
Their focus on efficiency, flexibility, diversification. It's a compelling model. And I think if other companies could learn from their example, the entire industry would benefit.
Imagine a world where energy companies are not just extracting resources, but also managing them responsibly and thinking about the long-term impacts of their actions.
That's a world I want to live in.
Yeah, it's a paradigm shift.
It is.
From that old way of thinking to a more sustainable approach.
And it's not just good for the planet.
Right.
it's good for business, too.
Exactly.
Because at the end of the day, sustainable businesses are more profitable businesses.
We are. Now, of course, we're just two voices here on Talk Tickers.
Sharing our humble opinions.
We're not giving financial advice.
Do your own research.
But hopefully we've given you something to think about.
Some food for thought.
And maybe some inspiration to look for companies that are doing things differently.
Yeah, because there are a lot of them out there.
There are.
And they're worth finding.
They are. All right. So we've talked a lot about Diamondback, but now I want to shift gears a bit and talk about something else that's been on our minds.
Ooh, this is intriguing.
This idea that sometimes the best investment opportunities are the ones that nobody's talking about.
The hidden gems.
The diamonds in the rough.
The underdogs.
Exactly. So we want to challenge you to go out there and do your own research.
Don't just follow the herd.
Think for yourself.
And who knows? Maybe you'll find the next Diamondback Energy.
So we spent a lot of time today talking about Diamondback Energy and their approach to the oil and gas business.
Yeah, it's definitely different from what we're used to seeing.
Right. And I think that raises an important question for investors.
What's that?
Is this a sign of things to come? Are we seeing a broader shift in the industry?
Towards this more sustainable model.
Exactly.
Yeah.
Away from that boomer bust mentality.
Yeah, I think it's possible. We've seen a lot of volatility in the energy markets in recent years.
Right.
And that's forcing companies to rethink their strategies.
To find ways to be more resilient?
Exactly. And Diamondback's approach seems to be working for them.
It does. They're focusing on efficiency, flexibility, diversification.
All the things we've been talking about.
And it's paying off. They're generating strong cash flow. They're returning value to shareholders.
And they're well-positioned for the future, no matter what happens with oil prices.
That's the key, isn't it? It's not just about surviving the downturns.
Right.
It's about thriving in any environment.
Exactly. And I think that's what makes Diamondback so interesting.
You're not just reacting to the market. They're shaping it.
They're being proactive.
And that's a powerful position to be in.
It is.
So I guess the question for investors is this. Is Diamondback a one-off?
Or are they the vanguard of a new era in the energy sector?
That's what we're all trying to figure out.
And only time will tell.
But one thing's for sure, Diamondback's giving us a lot to think about.
They are. And they're showing us that it's possible to be both profitable and responsible.
And that's something worth celebrating.
Absolutely. So keep an eye on Diamondback and keep those trade ideas coming.
And remember, folks, this is not financial advice.
Do your own research.
Talk to your financial advisor.
Make informed decisions.
And until next time, happy investing.
See you, my pen.